So, since we have so many questions on the lives, I thought that we would do a little something and answer them in addition to all the answers at the live. And this is from Colleen Allen 3382, and she said, I just listened to Dan at I allegedly on YouTube. He said the government is changing the $10,000 limit withdrawal notification to a much lesser amount. Have you heard anything about this change? And for clarification, do you think the government would confiscate foreign gold coins? Do they have to be minted before a particular year to be safe? Thank you for your expertise. You are appreciated, and I appreciate these questions too. So I'm just going to give you the short answer. When I went in to look, and there is no confirmed at this point I'm not saying this can't change, but at this point there is no confirmed U.S. law that has officially lowered the long-standing $10,000 cash withdrawal deposit reporting rule. Now look, they put that in place to make you feel uncomfortable to second guess whether or not you're going to pull funds out of your account. It is not illegal. And oh, by the way, there is a paper trail. If you take out a withdrawal and then you later make a deposit, there's your paper trail of where this money came from. However, there are proposals and media reports suggesting that the Treasury may lower that threshold in 2026, but these are not yet enacted into law. They haven't been fully confirmed, and we're just looking at the discussion of changes, and I'll let you know, or maybe you'll let me know, when those changes occur. But just keep in mind until they say that it's illegal to take out more than $10,000. You can go into the bank and take out any amount of cash that you want. Are they going to write a SARS report? Sure they are. They have to. Will anybody read it? Probably not. Remember, they're way understaffed, and it doesn't matter anyway because you are not doing anything that is illegal. That's the bottom line. Google AI is saying, as of January 2026, Basel III has passed a new law that states that banks are no longer allowed to rehypothecate gold and silver. Is this true? Well, let's talk about that because, first of all, do you know what rehypothecate means? What that says is any deposit that you make into your account, then the banks have the right, once you make that deposit, it is no longer yours, and the banks have the right to use your equity as their collateral to borrow and create more. So, while I want to clear this rumor up basically because this is a global thing, Basel III, but you might have noticed that I'm saying it's a nothing burger here in the US because of all the deregulation. So, but let's just clear this up that's been spreading online. And the reality is Basel III has passed a new rule banning banks from rehypothecating gold and silver. Well, it sounds dramatic, but it would be huge if it were true. But here's the reality. No such rule exists. Basel III did tighten liquidity rules years ago, but that was particularly for unallocated or paper gold. And physical gold held on the bank's balance sheet does get Tier 1 treatment, meaning that it's the safest thing that you can do. But frankly, none of that bans rehypothecation. Not in the US, not in Europe, not in the UK, and not in any Basel Committee document. There is no law, no regulation, no Federal Register notice, no BIS update, Bank of International Settlements, nothing that says that banks can't rehypothecate gold or silver. If a rule like that had passed, it would be really front-page news across every major financial outlet. So where does the rumor come from? Mostly from people confusing the NSFR rules, which make paper gold more expensive for banks to hold with an outright ban. They're not the same thing. So the bottom line is very simple. Basel III did not ban rehypothecation, but the fact that people believe it tells you something important. Trust in the paper markets is breaking down, and investors are looking for clarity and real ownership. But frankly, if you don't hold it, you don't own it. And we're watching gold and spot silver spike as Wall Street is losing control of this narrative. Wolf728 asks, Senior Support Hub, I was surprised to hear that North Dakota is the only state that isn't in the Federal Reserve System, according to Bill Halter. He just said that a few days ago in a podcast. How can that be? Well, all right, let's clear up a claim that's been making the rounds. The idea is that North Dakota is the only state that's not in the Federal Reserve System. And it sounds dramatic, and it would be if it were true, but it isn't. North Dakota is absolutely part of the Federal Reserve System, just like every other state in the country. So here's where the confusion comes from. North Dakota has something unique. They're the only ones that have a state-owned bank in America, the Bank of North Dakota. Because it's state-owned and works closely with local community banks, people assume that it operates outside the Federal Reserve System, but it doesn't. It still uses the Fed's payment rails, clearing systems, and regulatory framework. Another source of confusion is that many banks in North Dakota are state-chartered and choose not to be member banks of the Federal Reserve. But membership is optional for state banks. That doesn't mean the state itself is outside of the system. The Federal Reserve Bank of Minneapolis oversees the entire 9th District, and North Dakota is right in there. So the bottom line is this: North Dakota is fully inside the Federal Reserve System. The myth sounds exciting, but the facts are clear, and understanding the real structure matters because it shows just how deeply the Federal Reserve reaches into every single corner of the financial system. If you want to be outside of that Federal Reserve System like I do, this is how you do it. Physical gold and silver in your possession. Tada. Not rocket science, very simple. And Silver Johnson 3163 asks at the Senior Support Hub, the US Mint just suspended numismatics due to metal shortage. Well, there is a metal shortage, but the thing that just happened at the US Mint is a signal that most people are missing. The Mint has suspended all silver numismatic products. They call it numismatic, but if you can hold it in an IRA, not so collectible. They just want to charge you more for it. But that is every collectible co-coin. Every metal has been pulled from being on sale because of how quickly spot silver is moving. The official reason is extreme price volatility and the need to review pricing. But let's translate that into plain English. The Mint can't source silver at a stackable or a stable price. And when the largest sovereign mint in the world can't get enough metal at a predictable cost, that tells you that the physical market is under real strain from the paper market. And it goes into the transition that we're in right now that we entered back last January, a year ago. This X is exactly what happens when the paper markets, those future contracts, the derivatives, the leveraged bets start losing control of price discovery. Tada! For decades, the spot market has been set by contracts, not the metal itself, not true supply and demand, but a handful of traders, and they could move the price of silver with keystrokes without ever touching an ounce. But when physical demand surges and supply tightens, the paper price becomes fiction. And the Mint doesn't buy contracts, it buys metal. And when the physical market refuses to cooperate with the paper price, the Mint has no choice but to stop selling. This is the moment when the real world pushes back. Thank goodness, I'm so glad it's here. This is when the physical market says, your paper price is too low, we can't get metal at that number. And that's when you know the center of gravity is shifting, that we are having a structural shift in how we get good price discovery. We saw this in 2008, 2011, 2020, and again in 2022. But this time the pressure is stronger. Industrial demand is rising. Investment demand is rising. And above-ground inventories are shrinking. The paper market can pretend for only so long, but the physical market, well, that eventually forces repricing. So the Mint suspension isn't just simply a supply issue, it's a flashing red light that the physical market is starting to guide price discovery. Tadam, we've been talking about this for a year, and once physical leads, the paper market follows violently. That's why owning the real metal, that's why holding it in your possession matters. Because when the system gets stressed, the truth shows up in the physical markets first. And silver is the fuse, and it runs first as that loss of confidence starts to erode. But gold is the anchor. And remember, silver gets used up. Gold does not. That's why it's the anchor, because it meets all the criteria to be a sound money. Both of them together. That's your bazooka in what we're going through right now. The transition into a new system. That's what's happening.